Okay, so what if somebody's coming to you, Ray? Let's say, Mr. Smith is been in Canada, he's been renting and he is excited to get his first property, he wants to get his first home. Maybe he has a baby on the way. I don't know. Maybe, he's getting married. He just wants to get a house. He comes to you and says, Ray, I've been looking at the areas and right now in the GTA, pretty much the starting price is $1 million, right? So let's just use $1 million. So he says, Ray, I think I'm gonna need $1 million, but I don't think I'm gonna get approved. You crunch the numbers, you see that he's not able to get approved at that moment. What are some things that Mr. Smith and other clients like him can do to increase their ability to afford a $1 million mortgage or to increase the chances of them getting approved? Is there anything other than make more money?
Yeah, that's that's number one, right? So if certainly there's a lot of things that affects how much you can borrow, the income. So sometimes some of the techniques that we've seen lately is that certain families will look for properties that has secondary or third units, right? So you can increase your income, so make more money, yes, of course, on a personal income level or business income level. But that's one way when you have a secondary unit, is one way to rent out the basement, get a few $1,000s out of that one. And certainly that's additional income that we can use. Make sure that your credit history is impeccable. This is where you go, you can get the best rates, you can get the best features of the mortgage if you have really good credit history. Because if you have bad credit history, even if your income is, I don't know, $500,000 a year, you cannot, it's very well possible that the banks will not lend you that money because of that credit history. So credit history is another. Um, there's a few other things, paying down some of your existing debt. So if you have a lot of car loans and credit card balances and line of credits and stuff, those will affect your ability to borrow. So sometimes I'll tell my clients, say, hey, I mean, if you don't need a car today, or you have your nice, dependable Toyota, let's close the deal, let's buy that home because that is an appreciating asset, and the benefits of home ownership is really there for you and I want you to get it. So maybe in a year or two, then you get your Mercedes Benz.
Okay, that's good advice. I like that. So, what if somebody wants to come to you for a principal property or residence versus a rental? Does that play into a factor of what kind of mortgage that they can get and how much of a mortgage they can get?
Yeah, it does. From a lender perspective, those are two different uses of a property. It's two different risk level as far as they're concerned. So if you look at a home that Amin is going to buy to move into, that's your primary residence. That's where you're going to put your head down every night. Financial institutions, when counted, as a lesser risk compared to a rental property that somebody else is living in. So if you have your last thousand or last mortgage payment, or at least for the month, or your mortgage payment for the month, you'll likely put that mortgage payment on your home that you're living in, as opposed to the home that somebody else is living in, even though you own both. So that's one risk component of it. But there's also different minimum down payment requirements. So the home that you're going to live in, the minimum down payment is 5% for the first $500,000 of the purchase price, and then after that, it's 10% up to a million, right? So you can go high ratio, less than 20% down, minimum 5% if it's less than 500,000. Anything over that, like I said, the subsequent anything over that will be 10%. $1 million or over, it has to be at least 20%. Now, if I compare that minimum down payment from a primary resident to a rental property, the rental property, you can only get a minimum down payment of 20%. Sometimes it's more.
Mhm. Okay, that's
Okay.
interesting. But you were mentioning if somebody wants to, let's say, buy a home and the only way they can afford it is by having that income basement or being able to have roommates or whatever, is that something that is going to be an issue for them?
No, as long as you move into one of the units. So if you have a fourplex or a triplex and you're in one of the main units,
Mhm.
you can get the rental income and still qualify under the high ratio or less than 20% down scenario.
Okay, that's good to know. That's really actually
Yeah.
good to know.